Click the bell icon to get latest videos from Ekeeda.
Hello friends, we'll be discussing about certain types of accounts. That means personal, real and nominal account. We'll be passing certain journal entries for you and we'll be discussing how these accounts can be further classified into different types of accounts. Let's go ahead and find that out. So when we are talking about types of accounts, we have already learned that we have three kinds of golden rules that we have to deal with: personal account, real account and nominal account. Personal account gives you debit the receiver, credit the giver kind of rule. Real account gives you debit what comes in, credit what goes out, and nominal account gives you debit all expense and loss, credit all incomes and gains. So when we have to talk about these kind of illustrations, we have to further deal with journal entries and what kind of account classification these entries fall into. So as we have discussed earlier, that every transaction might have a mixture of both these accounts or all three of accounts together, or one account being dealt with in one specific transaction. That means any illustration will either have both real account transactions or both mixture of personal, real and nominal accounts. So we'll find out when we try to solve all these problems together. We have given you certain illustrations in the next sheet. You can note those illustrations for your reference and try solving those journal entries on by yourself. Now we'll further go ahead and try to solve all the journal entries for you. Let's go ahead and find out those questions for your reference. So the question states, identify the effects or probably the elements which are affected due to these kind of journal entries. That means we have to figure out that the transaction that has been given, first what is the journal entry for it, and second the account that have been noted down in the journal entries fall under which category. So we have certain questions. Basically we have 10 illustrations for you. We'll go ahead with each illustration one by one and we'll define each illustration for you. So we'll go with the first question first. The question states, Ibrahim sold goods worth rupees 12,000 to Mr. Narayan. Now, this is a transaction that they have mentioned. We'll have to pass a journal entry for this. Now that Ibrahim sold out certain goods to Mr. Narayan for rupees 12,000, we'll have to pass a journal entry. What do you think will be the journal entry here? Which accounts will be followed, which rules will be followed is supposed to be defined here. So I've given you certain time, think it out and write it down just on a rough page. We'll further go ahead and find out whether your entry matches the one that has been mentioned down here. We'll go down to the next question. I, a sole proprietor, commenced his business with a capital worth of rupees 2 lakhs. This is the second transaction that has been mentioned. Now, this means that he has commenced his business with a cash capital of 2 lakh. He has invested 2 lakh in his business and we got to write down the journal entries for that. So note down your journal entries and we'll further check whether that entry is matching the specific entry that has been mentioned. Now also note down that every journal entry that you are writing, you can also further classify which kind of account is it, whether it is a personal account, whether it is a real account or whether it is a nominal account. You can write that down and check whether it is matching the answers that I'll be showing you in the further slide. Let's find out the third transaction for your reference. Bought furniture for cash worth rupees 20,000. Someone has bought furniture for rupees cash 20,000 itself. That means he has purchased certain stock, purchased certain asset for his reference, and we have to pass a journal entry for that. So you got to pass down the journal entry, you got to classify down the account that has been mentioned here, and we'll further segregate that thing into different kind of nominal account, personal account or real account. We'll categorize them and we'll understand which transaction falls under which category. Now let's go down on the fourth option. Paid cash into bank rupees 1,50,000. That means you have deposited cash of rupees 1,50,000 in your personal bank account. Here you got to mention the journal entry first, then you got to mention which account will it be or which account will it fall it under, whether it is a personal account, whether it is a nominal account, whether it is a real account. Now these are the four journal entries that we have passed, or probably these are the four journal entries that you have passed and we need to check whether they are matching your reference or not. So let's go on ahead with the first journal entry and figure out whether your journal entry matches the one that I've mentioned down here. Let's figure that out for your next reference. Now, the first question itself stated that Ibrahim sold goods worth rupees 12,000 to Mr. Narayan. Now, this is a sales entry or probably goods that have been sold out. If Ibrahim has sold out certain things, that means we are getting cash or we are receiving cash. Here, that's the reason something will be debited and something will be credited. Let's figure out what that is. So, the first entry answer is mentioned down here. Let's figure that out. The entry is cash account debit to goods or stock account, whichever it, you can mention that part, either goods or either stock. So the first entry states cash account debit rupees 12,000 because debit what comes in, cash is coming in, to goods or stock account, credit what goes out. Hence both these accounts are real account because they fall under the category of debit what comes in, credit what goes out, which is the part of real account golden rule. So this transaction or this journal entry refers to real account journal entries. Debit what comes in, credit what goes out. Goods and stock is going out, hence the reason this specific entry is a part of real account. Debit what comes in, that's the reason cash is coming in, and that's the reason we have put this part under real account category. So I hope this is very clear. The first entry, cash account debit to goods or stock account, both are real accounts and both will be a part of real account golden rule. Now let's go on to the second entry and check what we have to define there. Someone that is the owner, that is I, he commenced his business with a capital worth rupees 2 lakh. Now capital has credit balance. Hence, when we are commencing this transaction or when you're commencing your business with your capital account will be on the credit side. So what is coming in? Cash is coming in. Of course, cash is coming into your business. That's the reason debit what comes in. Cash account will be debited and the credit account will be personal account or probably the capital account itself. Capital account will be credited and on the debit side it will be cash because that is coming in. Hence the entry is cash account debit to capital account. Amount on both the sides will be 2 lakh. Out of this, cash is a real account because it follows the principle of debit what comes in. On the other hand, capital account is a personal account which is related to that specific person. Debit the receiver, credit the giver. Credit the giver, that means the personal or the person who is the owner of the business is giving out this thing, hence credit the giver. These rules are merged and that's the reason one of the account is real and the other one is personal. So this is how you classify journal entries with different kind of accounts here. Let's go on to the third entry and figure out whether your entry matches the entry that we have mentioned down here. Now we bought furniture and this was paid by cash. The amount has been mentioned down here. Let's highlight that part. So we bought furniture for cash worth rupees 20,000. Asset has been procured. So asset has debit balance. So by far furniture account will be debited. Now what is going out for buying this furniture? Cash is going out. So credit what goes out. Cash again falls under the category of real account, hence cash is going out. Furniture is a part of real account as well. Debit what comes in, furniture account is coming in, hence furniture account debit to cash account will be the entry that will be mentioned down here. So the entry that will be finalized here will be furniture account debit to cash account 20,000 both, and both form a part of real account. Hence both these accounts come under the category of real account golden rule. That means debit what comes in, credit what goes out. I hope this is simple to understand. Let's go on to the fourth transaction on the fourth journal entry and figure out whether it matches the one that you have mentioned down here. Cash deposited into your bank account. Now, this is your personal bank account and cash is going in. That means that specific cash is going out of your business and it is going into your personal bank account. Credit what goes out. Cash is going out, hence cash will be a real account. Now it is going into your personal bank account. Debit what comes in. Money is coming in into your bank account, which is a personal account. That's why bank account debit to cash. Again, if you check, It is an amount that is depositing in your asset account or probably asset side. Bank is always on the asset side, hence asset side is increasing. So if you have learned earlier, if there is any deposit, asset side increases. That's the reason bank account debit to cash account with the amount of rupees 1,50,000. Here bank account is a personal account and cash account is a real account. So I hope these four entries were pretty clear for you and it has been classified, or you must have got certain idea about how real account, personal account has been a part of these golden rules and how to classify transactions or journal entries into accounts. Now let's go on to the next four journal entries that we have for your reference. Bought goods on credit from Messrs. Ramdas and Brothers for rupees 10,000. This is the journal entry that has been passed. We have bought certain goods from Messrs. Ramdas and Brothers on credit. Mention this word on credit for rupees 10,000. Make sure you note down this entry and you further classify this as whether this falls under the category of personal account, real account, or nominal account, and we'll check that later on. Let's go on to the sixth entry here. Sold goods on credit to Mr. Natikar rupees 8,000. We have sold certain goods to Natikar for rupees 8,000. Now again there is a sales transaction here and we have sold it out for rupees 8,000. Note down your entry and figure out which transaction or which account will it fall under. Let's find out the seventh or probably the next transaction for yourself. Paid weekly wages to worker rupees 5,000. You have paid out weekly wages to worker rupees 5,000. Now you need to figure out which account will be debited, which account will be credited, and under which category these accounts fall, whether they fall under the category of personal, real, or nominal. Do that thing and we'll check at the end of this specific transaction whether your entry are correct or whether they match as per my records. Received cash from Mr. Natikar rupees 2,000. We haven't mentioned cash there, but as it is rupees 2,000, we assume that it is the cash that we have received. So this is the entry. That means cash has been received for rupees 2,000 from Mr. Natikar. Again, note down your journal entries and figure out whether these accounts fall under the part of only real accounts or personal accounts, or whether they are part of nominal account or a mixture of both. Let's go ahead and check all these four entries again for you so that you will be able to clarify whether your answers are correct and whether it matches my records here. Let's figure that out for you in the next sheet. So the first entry, or probably the fifth transaction that we had, was we had bought certain goods on credit. Now, when we talk about credit, there is one specific thing that means cash is not going out. Hence, the transaction entry has been mentioned down here. Let's note down the transaction entry. We purchase goods and stock or probably goods from Messrs. Ramdas and Brothers for rupees 10,000 on credit. That means we are not giving out cash. So debit what comes in. That is the first transaction that will be passing. Goods are coming in, hence goods account will be debited. Now the next part will be debit the receiver, credit the giver, golden rule. Now, who is the giver? Messrs. Ramdas Brothers and Company of Messrs. Ramdas is the person who is giving you the goods. Hence, here real and personal account both are a part of here. So, goods account debit to Messrs. Ramdas Brothers and Company. Hence, we mention this transaction as goods account debit to Messrs. Ramdas and Brothers. The amount will be mentioned down here as per the question or the transaction. So we have real and personal account here. Let's go on to the sixth transaction and figure out whether you are correct or whether I am correct. Let's find out the next transaction. Now we have sold goods to Mr. Natikar on credit rupees 8,000. 8,000 credit sales to Mr. Natikar. Now this is a sales for you. Debit the receiver is the first transaction that will be passing through because Mr. Natikar is the receiver of the goods. So debit the receiver, Mr. Natikar account debit to sales account. Why we have mentioned sales is because this is on credit. We are not receiving cash. If you would have received cash, we would have mentioned some other entry here. But here, now that this is a credit sales, hence sales account is credited. Now, Natikar being a personal account, it will be a personal part. Let's figure out what does sales mean. So an article account, as we have discussed, is the name of the person, hence personal account. Sales is a category of sales, hence it is a real account. That means debit what comes in, credit what goes out. Goods are going out, and that's the reason we have formed it under the category of sales. And it has been mentioned under sales because this is a credit sales and not a cash sale. That's the reason this is the difference between cash and credit sales. I hope this is pretty clear for you. Let's go on to the next entry and figure out whether you are correct. Paid weekly wages rupees 5,000. Now this wages have been already paid in cash, so wages is an expense. Just referred the mail, or probably just referred the probable word that I'm saying, expense. Wages is an expense, hence expense form under the part of nominal account, and we are giving out it in cash. That's the reason cash is going out. So wages account differs, or probably wages account debit to cash account is the journal entry that will be passing through. Amount will be 5,000, where wages will be a nominal expense or nominal account, debit all expense and loss as per the golden rule of nominal account, and credit what goes out. Cash is going out here, hence it forms a part of real account. So I hope this account or this entry was very clear to understand how nominal account is charged here. Let's figure out what's there in the next transaction. Received cash, or probably received rupees 2,000 from Mr. Natika. You have received cash, that means something has coming in or something is coming in. Cash account debit. Who is the giver? Mr. Natikar is the giver. That's the reason credit the giver. Real account and personal account has been mentioned down here. Cash account debit rupees 2,000 to Mr. Natikar account rupees 2,000. That is the journal entry that you'll be passing down here. So every time you pass a journal entry, figure out what has been mentioned in the transaction, whether it is cash, whether it is credit, and that's when you will be able to understand which transaction or which account has to be debited or credited, or which account rule has to be followed, whether it is personal, whether it is real, whether it is nominal. According to that, you will be able to understand how you'll have to further figure out which transaction entry has to be mentioned for which specific transaction or which specific problem. Let's figure out the next two entries that we have mentioned for you in the next sheet. Received commission from Messrs. Orion Traders. The amount has been mentioned down here. I'll highlight that for you. 5,000. We have received commission from Messrs. Orion Traders, rupees 5,000. Now we are receiving commission from one specific company or a partnership firm. Now commission is an income because we have received it. So debit the receiver, credit the giver, debit what comes in, credit what goes out, debit all expense and loss, credit all incomes and gains. That means personal, real and nominal all have been mentioned. Now commission is an income, hence it falls under the category of commission account. Now who's the receiver, who is the giver is something that we'll have to check. We'll figure out once we complete all the transactions. Let's go ahead and figure out the next transaction for you. Bought machine from Mrs. Bulani and paid check rupees 25,000. That means we have purchased certain asset from Mrs. Bulani and we have given out a check of rupees 25,000. Hence we'll be further going out with checking that the asset has been debited. That means asset has been procured. Machinery account will be debited for sure. What is going out? Check is going out. That means you're paying it out of your bank account. Hence bank account will be credited. Now let's check and figure out whether the journal entries match as per our reference or as per our discussion. The first transaction is that commission has been received. So debit what comes in, cash has been received in. We haven't been mentioned, or it hasn't been mentioned in there whether we have received check or some other form of method or some other form of negotiable instrument here. So we assume that it is cash. Debit what comes in, cash account to commission account, because as I've mentioned that there is a nominal account in here, because it is an income that we are incurring or probably an income that we are achieving in here. Hence income account will be on the credit side as per the nominal account rule. Nominal account rule states debit all expense and loss, credit all incomes and gains. That's the reason when we talk about this specific entry, it will be cash account debit to commission account with the amount that has been mentioned in the question. Cash account will be real and commission account will be nominal here. Let's go ahead on the next part and understand whether these journal entries match as per our configurations. Now, here we have purchased certain machinery for your reference, and it has been purchased from Messrs. Bulani and a check has been paid. So as I've discussed that machinery is an asset, machinery account will be debited. Check the entry that has been passed for your reference, and bank account will be credited because it is going out of your bank account. If something has been purchased, there is an expense that you have made, machinery account debit to bank account. This will be the entry that you'll be passing. Let's figure out the amount. 25,000 is the amount that has been passed. So machinery account debit 25,000 to bank account rupees 25,000, as there is a check that is given. If it would have been in cash, machinery account debit to cash account would have been the entry. However, as there is a check, hence we mentioned bank account here. Now, bank account being a real account or nominal account or personal account, that is something that you have to decide now, because by far you would have been able to understand how these transactions work and how the accounts have been able to credit or debit as per the rules of the personal, real and nominal account. Now, machinery account is something which falls under the category of assets and liabilities. Hence, assets and liabilities are a part of real account. So machinery account will be real account, and bank, that means something is going out. Debit what comes in, credit what goes out. Both are real account here. Hence, machinery account will be a part of real account as well as bank will be a part of real account. The entry states machinery account debit to bank account rupees 25,000. Now machinery account is something which forms a part of asset and liability. Hence machinery account will be a part of real account. However, bank is a personal account. It is going on from your personal account. That's the reason you have given a check. Hence, bank account refers to one specific person. That's the reason it is personal account and not a real account. Hence, we have a combination of real account and personal account in here in this transaction, whereby machinery account debit 25,000 to bank account will be the transaction entry or the journal entry, and machinery account will be real account, whereas bank account will be personal account. So this is how you deal with illustrations when it comes to transactions of journal entries or recording journal entries for your reference. We'll further go ahead and discuss about all these transactions when you further go ahead with different chapters like journal entries, ledger balances, trial balances, adjustments of financial accounts, which I've already learned. That's where you'll be able to understand how you will be able to procure or how you'll be able to figure out these details when you have to pass on journal entries and classify these accounts under personal, real and nominal accounts. So that's what we had in this video, where we had to discuss about certain illustrations of types of accounts, that is personal account, real account and nominal account. Make sure the golden rules are followed, all the journal entries are made as per the golden rule itself, and after understanding what has been mentioned in the question. If there is certain cash transaction, go through that. If there is certain check transaction, always mention bank account there. Whether it's debit or credit, that will depend whether it's a purchase or sales transaction. Also, for your reference, if goods and stock account is not supposed to be used, you can use purchase or sales, whether in terms of goods have been bought, so it will be purchase account. Whether goods have been sold out, it will be sales account. This is just an additional FYI, that means for your information, which you can use for your reference in passing journal entries. Thank you for watching this video. Stay tuned with Ekeeda and keep subscribing to Ekeeda.